Alright, so we took a little bit of break from Friday's recap. We didn't really do that because I was feeling, I don't know what the word would be for it, but kind of burnt out because I was boxing and doing a bunch of other stuff, and I think I had some little bit of head trauma for a bit, so I was a little bit discombobulated for the rest of the trading week. Also, every single day I took the break, or I wasn't even looking at the charts, I felt better and better, and I felt like I could just take these consistent and slow winning trades. I felt way better about taking them instead of trying to find how to take these trades in just like one setup to make like 1K. Instead of being slowly consistent, I tried finding faster trades, and I think a lot of us tried doing that too. So taking a break is really helpful for me on that part. I didn't upload any videos or do anything, but I'm just gonna get on with a recap. Let me see what we're gonna do today, and I'll get on with it. Okay, so Friday's recap. Price action was pretty bad in my opinion until we got to 11. But up here you can see it's just a slow chop with deeper retracements than I'd like. Because usually if I get a retracement, I want to have a little bit more structure, see it a little bit cleaner. But you could see how choppy it was with the wicks going low. So I consider that more just accumulation, not something I'd be wanting to trade in. So seeing this, I can't really see any trades I want to say because you can see this bearish fair value gap disrespected. Inverse fair value gap, we failed it. And we didn't really form fair value gaps. We took out this low, we came up higher, and we went lower after taking out this high. So it's just something I didn't really like to see. And right here, this looked like a sell model, or this does look like a sell model. I'm pretty sure I said this one looked like a sell model, but I wanted confirmation. This looks perfect for one too, because you can see we had a market structure shift after taking out this high. We retracement into this fair value gap. Did we retrace into it? Let me just confirm that we did. Yeah, we retraced into the fair value gap right here, and this would be where we're going to take shorts. And yeah, it would be okay to target this low, but this is only like, I don't know how much handles this is. 20 handles, and we want to be targeting more than that. We want at least just, I think, down to original consolidation, which would probably be down here, or this low right here, or a little bit lower than that. But we didn't end up getting that. So I think we took a break even here. I'm not too sure if we even took the trade. I don't really remember. But this, when we had this run up and we took out this high, this is where we started having much better structure. I want to look if we had a silver bullet between 10 and 11 real quick too. Because I know M2 is going to go into his funded eval only turning a silver bullet. So 10 to 11. You can see that we had some price runs up. 5 minute, we definitely didn't get any 5 minute fair value gaps here. Yeah, none. Go on the 1 minute, let's see if we can get some sort of internal sweep. And it doesn't really look like we did get one other than this, but this is closer to the macro ending. And yeah, there's nothing much in here other than this fair value gap right here, but I don't really think that'd be classified as something we'd take. Okay, now going into the overall sell model, it was actually on the 5 minute. Let me look for if we have a higher time frame PD arrays. We took out this high right here. I'm gonna clear up the charts, but we ended up taking out this high really clean. We took out this high extremely clean, and with this order block, which I want to find a higher time frame one like this one, or one that had a cleaner move up so we can identify it properly, but we weren't really able to do that. So on the 5 minute, after we took out this high, which was basically our objective for the day, then we could start looking for shorts or look for a sell model to start playing. Okay, so obviously we have this inverse fair value gap. I would have wanted to see trades off the inverse fair value gap first of all, but we didn't get it, so I would have probably had limits right after we closed below. I'd have limits set for this right here, and my stop loss would probably be at this high, or 15 handles if we permitted it. So 15 handles right here, and this would be our first limit order that probably wasn't tapped. So if we didn't get that, then after forming this fair value gap, I could see us go lower. We're not going to retrace. My next lineup would be this fair value gap right here, and it would be off the equilibrium, and we still didn't get that. So limits would have been set for this one. So limits would have been set here at the equilibrium, which is also this inverse fair value gap. So this is where I'd have the most confidence in taking the short. Inverse fair value gap, plus we have this fair value gap that pushed us lower, and we didn't really get a market structure shift. And we did end up retracing back into it, but I probably would have still had the limit orders in to this, and we will have taken the short with a 15 handle stop, and we will have targeted probably closer to this low. This would probably be our first price objective. I also want to throw standard deviation on here, see where we went, and I don't really think we would have any targets down here, but if we were going to go lower, I would have targeted down here, but we didn't get that. So safest option in conditions like this, and we could also just continue pushing up higher with this short. Probably safest place to take it off would be off of this low, which is 60 handles, which that's pretty good. and it would have no drawdown. But our next re-entry would probably be off this breaker right here, and you guys know what a breaker block is, right? Hopefully. Let me see the chat and everything.
What's the difference between the inverse fair value gap and the normal fair value gap?
It's just a bullish fair value gap that got ran through. I wish I could find better examples of it working. This is actually an example of it working right here. It's just a bullish fair value gap that gets ran through and used as resistance or support. So,
Okay.
let
I
me
thought once it gets ran through, it doesn't work anymore.
no, once it gets ran through, it has potential to work as an inverse fair value gap. It also depends for inverse fair value gaps. I want to see it originally function as a PD array, like a fair value gap that push price up to take out a high or some sort of fair value gap, something that fills up an objective. And I would want to see that. That's a high probability inverse fair value gap. I wish I could find other examples. I could go look for one real quick, but on the 5 minutes, it's going to be kind of rough. But finding these examples more intraday, or when you're actually looking at the charts, it's so much easier.
I appreciate it.
Yeah, of course. I'll just siphon through these. Look for a sell model that's obvious. That was today.
For that trade, I traded that live, and what I did was I used the swing low at the end of the Asian session to target. So I caught the exact bottom on that.
Oh, nice.
Yeah, yeah.
Low. Okay.
So it was weird. It was a swing right after the macros. So the price level was, I'm on NAS 100. I don't think you'll get the same.
Yeah, NAS 100 usually moves a little bit different than
yeah.
pair.
Yeah, but at 40 minutes after midnight, I used that swing low from the Asian session to try to target that low here.
Okay. Do you see this fair value gap right here? This bearish fair value gap that got ran through?
Yeah.
Yeah. We run straight through it, and then we come back down. We retrace into it, and you can see. Do you know what consequent encroachment is?
No.
It's basically a fair value gap or it's just the middle of a fair value gap, like the exact middle. You could use like equilibrium, this thing, but it's just the middle of a fair value gap. And you could see that was respected. And when we see consequent encroachment being respected, or the middle of the fair value gap respected, that's a really good buy indicator. Just the bodies of the candles. The wicks don't have to. Some people like to take entries, because if we see this and we have wicks going below it and consequent encroachment is being respected, some people take longs outside of the fair value gap, taking trades off the mohawks, and they get like really small stops, really small entries.
Alright, bet.
Okay, consequent encroachment and mean threshold. Mean threshold is order blocks and breaker blocks. Consequent encroachment is just fair value gaps and I'd say the softer PD arrays. Okay, and yeah, you can see that this fair value gap, this bearish fair value gap, gets ran through again, and this is a Reaper PD array, which is just a fancy name for fair value gap that's constantly been respected or ran through. And you can see, or no, it'd be called Medusa. I remember. It's just a Medusa PD array, which it's just really fancy. We probably wouldn't have seen it, but that's just another way to call it a Reaper fair value gap right here. And it was respected. Typically, you don't want to see the wicks go outside of them. So back onto this trade, you can see this breaker block right here, and a breaker block is this high getting ran out, and it's just a low before we ran through this high. So this low right here, this little swing low, up on the 5 minutes, you can see it clearer. Okay, this swing low, and then we pushed up higher, and we took out this high, and we ran through it. It's basically just an order block, the wicks of an order block that got ran through. So I could draw it out, because it will be simpler, low, higher high, which takes up the liquidity, and we go lower. We tap back into it, and this is our breaker block right here. And we can expect lower prices from that. And if we miss that, or that is where our entry would have been off. And I really like breaker entries. What was it? I really like breaker entries off market maker sell models, because there's usually second leg distributions, which is just our second re-entry off of them, and we get almost no drawdown with them. Like we could get 10 handle stop, move stops to break even, and we could be targeting. We'd be looking for some sort of fair value gap to be filled, and I don't think we got that. But this would be the low hanging fruit. So safest take profit would be 40 handles lower, and this probably would have been our safest take profit, which is just the slow that we formed. And you can see that we were kind of respecting the breaker, and we failed to respect it, then we pushed up, and we just continued rushing up. Also tap back into, what was it called? I know we tapped back into some PD array over here. Okay.
It was the breaker on the 1 minute.
Oh, okay. Thank you. Do we have anything else we want to go over, like any questions? Oops.
When you have time, can we go over psychology?
Psychology. Yeah, what type of psychology do you want to go over?
Taking break, not over trading, over leveraging, stuff like that.
Yeah, of course. Hold up, let me just get the timestamps down.
Revenge trading.
Revenge trading, I got you, I got you. Okay, so for psychology with that, basically, you know how we're supposed to be as traders, taking these small trades, just trying to build up our equity, not looking for big returns, right? And when we do have a partial, I think a chunk of our account taken out, basically, and we want to rush back to make it back quickly, you know we're not supposed to be doing that. And I was just listening to one of the ICT Twitter spaces about this to actually help my psychology, and I'll send that in. I'll put it on my channel actually, or the YouTube channel, either one. But we are rushing to get back what we lost quickly, and that is what messes up. Because usually whenever we lose that account, like I know some of us here, we lose a chunk of our account, and we try revenge trading to make it back. Basically, you're not gonna make it back. I don't really know any other way to say it, but yeah, it's not gonna work. Revenge trading never
Yeah.
works.
Huh.
Huh?
Frosty, meet up.
But yeah, a lot of us have
Yeah.
tried to revenge trade, make it back, trying to force ourselves into trades that we know we shouldn't be in there because the conditions are bad. If we don't see anything on the charts and we're not being patient, we're not waiting for our subs. And you especially see us, our bias here would be bullish, and we're disrespecting this for value gap right here. And conditions are just improbable to trade in, but we're trying to force ourselves in. But I wish I was better at talking about psychology, but right now, I don't really know. I'm gonna have to let some experts do this. Does anyone have any tips on psychology? Like, I know Andrew might.
Yeah, most of the time,
Force trading.
Force and trade.
most of the time, it's not really psychology. It's more discipline.
That's right.
So just have your plan. See if there is if the trade fits your plan. If it doesn't fit your plan, don't take it. Easy.
Yeah, but okay, so what if you
Easy.
can't take the what if you take the trade and it fails and people want a revenge trade to try making their account back or just try making it back
You
quickly?
don't. You should have a rule that said, I only take a trade, let's say, if you have a value gap, sending in a premium, aiming for sales of liquidity or something like that. Okay? Just you have your rule set, and if you only see two confirmations, then you should not take the trade, you know, because it goes against your rule set. Then there's another rule that you can set. For example, you only trade in New York, and you only take one trade, right? So that limits your losses. And yeah, it's just a mental game. That's all it is.
Some of you don't
It
like that.
increases your trade
Some of you want me to go back over
probability
to Twitter. I'm
when
not going back over
when
to
you
Twitter.
decrease the amount.
Quality
But
over
everything
quantity.
that you do
Yeah,
should be
when you
driven
decrease
with
the
the
amount of trades that you're
mindset that
willing
you
to
are
take,
focused
you're
primarily on.
you're giving yourself less chances to call to you're giving yourself less chances to give yourself a reason to trade. So the trades that you put out are gonna have
It'll
real
influence
good
your trading
reasoning.
decisions.
Exactly.
And be
I'm
excellent.
trying to find it. I was listening to this earlier
Your
when I was cooking steak,
efficiency,
and I
your
swear
execution
it
and
helped me.
entry, your
You guys
stop
heard?
placement, your trade management. You're not over leveraging. You're not trying to do the maximum outcome. And you're worried about capital preservation. Number one, first and foremost, is you're not trying to risk money needlessly for the sake of being in there and seeing what happens. Because I'm going to save you some money and time and heartache. Here's what's going to happen. You're going to lose your ass. And that one trade is going to cause you to go into a tailspin and you're going to blow your account trying to rush to get it back. It happens all the time. Just don't do it. Period. And finally, lead dog pitfall.
I don't think that.
Everybody wants to be the lead dog. Everybody over here on Twitter right
Yeah,
now
it's
is
basically
clamoring.
just trading like you have an ego or trying to compare yourself to other people. Because I know some people have seen Frosty with his like up almost 3K on his PA account, and their minds just blow up that this kid in high school is up 3K on a funded account, and they still haven't taken a trade and they're being patient. And you just gotta suppress that emotion. You just can't let it take control of you. Listen to some music actually. You gotta listen to something that'll calm down your mind so you don't have like this frequency in your brain that makes you want to be better or try to show yourself off to other people saying that you made money. You just gotta be patient, execute on your edge, and trade for the long term. I feel like that's the best way to put it. So just try to
It's
chill out and be able to walk away from the charts, especially when you're up. You gotta walk away when you're up. If you take a loss like max daily loss, you gotta know when to walk away from the charts. Like if you're in class, like just slam your laptop down, stare at the teacher or something. Like try to blow them up with your mind or something, and just put your emotions into that. Just hope that you can blow the teacher up in the front of the classroom with all your emotions, as long as it's not going into the charts. I swear that's the best way to put it. I've done that before. She makes me put away my MacBook, and then I'm just staring at her, hoping that she just blow up in the front of the classroom.
yeah, fuck you, bro. I just fuck teachers in all like
Mhm.
general. Fuck
Yeah.
them, bro.
Do we have any questions about the charts right now?
Nah, but um,
I do.
What's up?
What do you
bro.
do to find your daily bias?
Finding my day. Okay, that's perfect. I like to look at news and DXY too. DXY is a massive one. Do you know what DXY is?
Yeah, that's the U.S. dollar, is it
Yeah,
not?
US dollar. Basically, we
Yeah.
oops. Okay, we basically move. Give me a second. I gotta fix my stream. But basically, we move inverse of what DXY does. Hold up, I'll fix that real quick. There we go. So we move inverse of what DXY does. So if DXY is going lower, then we're going higher on NQ. And I'd like to see what we're going to do in DXY. Because you can see this order block on DXY is being respected. And we also have mean threshold of the order block right here too. And we can see if that's being respected. And I don't think we tapped into it yet, but it's still going to be objective. But I just do higher time frame analysis. Just normally what I do. And look at where we're going. So on DXY we're going lower. Our bias would normally be bullish on NQ. But I also want to check out NQ, look at the daily chart, see what type of highs, lows we just took out, because you can see we took out this high. You want to see what market structure shift we're in, where we're heading to in the markets. Okay, yeah, it looks like we're pretty bearish just because we took out this high, but on the weekly, it looks like we can continue going higher. 4 hour, we did try going lower, it looks like we're just going to push back up. It looks like we have a break structure on the way, plus we're bearish on DXY, just because of our overall structure. And I just like to mark out our PD arrays going into tomorrow. So we just mark out for value gap. We have a volume imbalance right here that was respected. And that's all I really have. And that's just what I have for the day. I don't really get too married to my bias. I just trade off whatever I can find on the day. It also has something to correlate. I don't know if you've seen my power of 3 video. But it's basically Monday accumulation, Tuesday manipulation, Wednesday, Thursday is expansion, Fridays are retracement. And that's basically what I trade off of most of the time. I feel like that worked really well. Like those are just what I have in mind because I look for some sort of power of 3, some sort of manipulation on Tuesday, expansion. So just try finding an example. Monday, accumulation. I mean small moves. Tuesday we have massive manipulation lower. Wednesday, I want to look for an expansion. We get an expansion. Then I think we get some sort of reversal here after taking out this high. Then we go lower, expanding more through retracement Friday. And we take out this high, so
I have a question.
what's up?
I've been trying to, learn to use the macros a lot better. Am I right in saying that I could, like, tomorrow we could probably expect the
No, I thought
830
it was
macro to spike up and then continue down for the rest of the day?
Yeah, it's
Like,
possible.
would that be a valid assumption? All right.
Let me fix my contracts real quick. Oh, goodness me. Doesn't it already... There we go. Okay, finally. We fixed that. Okay, also, another thing. Another thing I'd like to go over. I also want to see what we're doing for premium and discount, too. So, look at where we're at on the charts. See if we're in a... Do you know what premium and discount is?
Yeah, just above or below
Yeah,
0.5.
yeah, above and below it. And I like to use this if we're in a range. But if we're in a range, we just took out this high. Obviously, we want to return to some sort of discount. So, going into tomorrow, this. Wait, no, I'm pretty sure we're bearish on DXY. Yeah, we should be looking for shorts or longs to break structure because it doesn't really look like we're pushing lower. It looks like we're just breaking structure. But still, if we fail to take out this high and we ended up sweeping this liquidity right here, sweeping out this high, and we just continue lower, I'm not really expecting it because Monday and Tuesday are probably going to be really slow. So, I just forgot the words. It's going to be slow, so we could just see a bunch of consolidation chop, unless we can get some sort of volatility, but we don't have any news. We have CPI further down the road, but Monday and Tuesday, not much volatility, so I don't really think we're going to be looking for trades, but it might just be slow moves, it might just be accumulation, but down the road somewhere, I want to see this fair value gap get filled, but I think at this moment, we're looking to break structure above this high. right here.
So is the red considered premium? I'm guessing.
Yeah, red is discount.
And
Red
this
is
one,
discount. Yeah.
red is discount.
Yeah, I messed it up.
Okay.
But you're basically you'd look for longs in a discount and sells in a premium. So this would be a perfect place for sells. But then again, we just wait for us to break structure to the upside.
So you'll buy in the discount and then sell in the premium.
Yeah, exactly. That's exactly what you have to
Alright,
do.
bet.
That's the best. I mean, that's the best way to do for trade because markets should return into a premium for a retracement. I can find some examples of that for you. This is way too deep into a discount, but this is a discount for value gap right here. Boom. Okay, it should be the other way around. Let's just fix that up so it's simpler because I don't think some people understand that. But look, we have this discount for value gap that we did tap into, and for a market to fully retrace, like conditions good and everything, I want to see a retracement into discount plus a fair value gap or breaker block like right here. Wait, yeah, that is a breaker, like a breaker block right here, and you can see we tap into a breaker block plus fair value gap. We push up higher, and take out these highs, and just price seeking liquidity. But
How do you know, like, you know how there's like a 1 on the top and 0 at the bottom? You can make it to where it's like the vice versa.
wait, which one? Like the red and the green?
Yeah.
Oh, it's
Like,
just
how do you know?
oh, you could just draw it like top to bottom. Regardless, it doesn't matter because the lower portion is always going to be discount, and the higher portion is always going to be
Just low
premium.
price, you're right.
Yeah,
Okay.
it doesn't. The color doesn't matter. It's just what was it called? It's just which one is low.
Okay.
Okay. And
Mantas,
what's up?
can we go to one crucial fact that's looked over so much where it's waiting for a retracement for your entry?
Yeah, of course. You want to get like the best entry possible. If you want to get the best entry, you have to wait for a retracement. Like, do you want me to show like the sell model we had Friday? Like,
Yeah, like show like some people like a example.
yeah, of course. Like, do you think this would be a good enough example, like the sell model that we traced into?
Yeah, I think this would do just fine.
Okay, so on the 5 minute, you can see the price moves a little bit slower, but we had that 1 minute breaker block, which I think you guys can identify because I just tree how. So it could be just the wicks, but I like to put the wick and the body in. But for this example, the only reason why I didn't do that was just because it was a little bit simpler. But this low right here, it was a full body. But breaker block, we had a low before we took out these highs, and which high did we take out? This high right here. So we took out that high, this low. So once we run through it, this is going to be a breaker. Some people get caught up taking shorts here, but with where we were at with this condition, these conditions right here, like faking market structure shifts, and us pushing back up higher, I'd want a lot more confirmation. So when we start breaking structure right down here, this confirms it for me, even though we got the initial break structure, plus the retracement rate. I'll show you. Plus this retrace is supposed to be a different tool, but this retracement right here. We didn't fully retrace into our, you can see we didn't fully retrace into a premium like we would have wanted from this low. Then we put in another low, and initially for every single trade we want to wait for a retracement into this premium. So after we put in this low right here, we're going to wait for at least a return into the premium. So we're looking for premium PD arrays, which that aligns with this bearish for value gap. So we have this right here, and we didn't tap that, but we did have this breaker that was still left over right here that we've been respecting. And if you go on the 5 minute, the higher time frame, we already went over this, but just to make sure it sticks with you, inverse for value gap plus this regular bearish for value gap right here, and that probably would have been most pristine place to the most pristine place to place your trade, because you would have had almost no drawdown if you had your limits set properly. And for I take a lot of trades like this whenever the conditions are good. You can see, scroll through my analysis channel, I usually have 15 handle stop right above the sell model. We get like no drawdown off a breaker play, and it usually runs to a take profit a little bit further than that. But I always make sure I call out stops or break even. Just the second we have this reaction right here, it just stops or break even, or moving my stop closer to our take profit or at the top of these PD arrays. But usually I don't really, personally I don't like moving my stops, but just to make sure I have a high win rate, you guys aren't losing money. That's why there's a diamond baller rule, because people with the capital, or they're willing to hold on to my analysis, they trust my bias and my analysis more than I do, they make a lot, because their take profits run to like 100 handle take profits, 150, sometimes just 60, 70 handle take profits. Meanwhile, I'm calling take profits at like 30 to 40. but that's not always guaranteed. That's why I'm just trying to make sure you guys are profitable on the month. So you're taking like break-even trades, sometimes trades in profit. The worst I think I've probably made people lose was like a 6 to 7 handle stop loss. But some people they put I mean I called break-even on that trade too. But some people they hold for too long with way too much leverage. But yeah, worst I think was a 6 handle loss, which I already called like take profits at break even or in profits, but some people kept holding on to it. Okay. Do we have any other questions or
I got a question.
yo, what's up?
So, yeah, I've been in the Discord for like a week or whatever, and I know some of y'all in high school, right?
Yep.
And I'm in college right now. I play football in college, and the timing of trading is kind of difficult for me. Because, in the morning, I know y'all got classes in the morning, I got practice in the morning, and then classes in the afternoon and things like that. So I feel like a lot of the times I'll be missing good setups and things like that with high volume and the market's moving well and things like that.
Yeah.
My question is there like a specific time y'all look to trade, or I know y'all might have difficulties with classes and stuff.
Yeah.
So how do you get around that and things like that?
There's something called the silver bullet model that we trade, and how do I explain this? It's only during 10 to, I don't know what time it is for you, but it's 10 to 11 New York time. It's just like, for me, the way I simplified it, I made a video on it. I kind of looked back on it and looking at the first 5 minute fair value gap that we form during this time. So just one number you have to be looking to take a trade. That's all you need, and you just target maybe like 10, 20 handles, and you should be set with that. Maybe 40, because usually I target 40. But I know M2, he's the one that's actually been digging deep into my strategy, back testing it. M2, can you vouch for it real quick, or just tell me what your findings were for it?
Yeah, I can. Okay. So for the silver bullet, essentially you have to kind of like modify the strategy a bit. You have to backtest it, of course, and have to modify it a bit. But for what I've seen, it's been pretty profitable with the risk. It's been pretty profitable. I think it's like a 3 to 1, about like a 3 to 1, around there. But yeah, for me, I really just chose it because like, dude, it's simple and it doesn't take much time out of my day, and I can like not look at the charts as for so long.
Okay, so explain that one again. What is
I
it?
mean, no,
I'm
it's
gonna
a good
explain.
strategy. I like it. I need to backtest it.
Yeah, basically, there's two silver bullets. There's one 2 to 3 p.m. The p.m. still. There's actually three. There's like 17 of them, but there's only like,
Yeah.
okay, not afraid about it. There's a London silver bullet, the New York session, and the p.m. session, or the a.m. and p.m. session. One is at 10 to 11. The other one is at 2 to 3 p.m. So 10 to 11 a.m., 2 to 3 p.m. If you're nocturnal, you could trade the London one, but I only recommend trading the a.m. session one. Are you available at like 10 to 11 or 2 to
10 to 11 a.m. New York?
Yeah, 10 to 11 a.m. New York.
Nah, that's when I
Okay,
practice.
what about 2 to 3 p.m. New York?
2 to 3 p.m. or the one.
The
Yeah,
PM.
I mean, yeah, that's when I'm usually free.
Okay, I don't know how good the 5 minute one works in the PM session because I don't really have that much data on that one. But I can just look over it real quick and just call out what I see. Probably better conditions.
Yeah, I haven't tested the PM session. I've only done AM session because of volatility and whatnot.
Yeah, the volatility is much better on the PM, but there is still a silver bullet you could trade 2 to 3 p.m. Okay, let's see this. Nope, that's too late in the day. I gotta find like the perfect time where it isn't too late in the day. And this is just pure chop. You don't want to trade choppy conditions. That's why it's still good to learn like what type of conditions to trade in. If you can see prices just moving in like one certain move like this and the wicks are bad, you don't really want to be trading that.
All right.
Okay, 2 to 3 p.m. I'll just mark other times.
I know ICT says he be usually when he trades in the PM, he usually does it like 1:30, right? 1:30 New York time.
Yeah.
Yeah.
Okay, so here's a good example. This fair value gap, I don't really like trading the one that forms directly on the time, especially when our bias is bullish, because this would just be a retracement in my book. But you can see that we formed this 5 minute fair value gap, and you can hold the trades outside of the macro time. But hold up, this is choppy conditions. I probably wouldn't tell you to take this trade too, because you can see the wicks are just being extremely choppy. So we could disregard that, but you can see we tapped into the fair value gap, went higher. I don't know how much handles that is. So I'm trying to pick out the ones best, because right here, which one is this? 10 to 1050. Let's find an example. This would have been a failure right here. 5 minute for value gap. Didn't work. I should probably back test it honestly, and send you like a little case study.
The one on Friday, the Head and Shoulders was a pretty good PM session trade.
Yeah. Hold up, I gotta find the specific times. Because I'm only looking for 2 to 3 p.m. trades.
Yeah, I think you need to like add more confluences to it.
Honestly, yeah, more
Because you
confidence
can't just,
would-
like-
I mean, this fair value gap here was respected pretty well,
Yeah.
but I think this would have stopped most people out. Nothing too good though.
So y'all usually just be trading in the morning in class and
Yeah,
shit.
just straight up in class. We catch the PM session moves. We trade AM a little bit differently too.
Okay.
Okay, yeah, I'm probably gonna have to find you like a 1 minute time frame then. Like, try teaching you how to trade down the 1 minute, because I don't really think the PM offers that much volatility to form a 5 minute fair value gap properly. So I think I'm gonna have to make a separate video on that, like the more advanced version of it. But it's not too bad. It's just like internal liquidity sweep, fair value gap, stuff like that.
Mm.
It shouldn't be too complicated. So right here, 2 p.m. I'll just mark out the session start. 2 p.m. to 3 p.m. right here for value gap forms. I mean, we already got the sweep right here, so going into the macro, we look pretty strong. So we got the. Do you know what liquidity sweep is?
Yeah.
And right here, this is our fair value gap that we formed. This is the first one that we formed in favor of our price run. So our, what was it called? Our entry would be set at the equilibrium of this fair value gap. Stop loss would probably be at this low, or 15 handles if you can, but 15 handles is probably my favorite to aim for. So 15 handles. Take profit would probably be this high up here, and we just wait for price to hit this high, which I guess that'd be a pretty decent run. 60 handles is good, especially with one NQ contract. Let's show you what that does. So are you trading like a live account, funded account? What are you going for in trading? Because risk management also plays a massive role in it.
Yeah, I'm using the 100K funded account right now.
Oh, 100. Okay, perfect then. Yeah.
Yeah.
Trading one NQ contract would probably be best for you. So you come down here, your entry off the equilibrium, then you hold to just 60 handles, and that should have been like more. Oops, that was a wrong one. It was not supposed to be a sell. My bad. But yeah, I want to see how much a 60 handle win should be. But you want to be aiming for at least 40. But I think 15 to 20 is a safer number, but that's 1 to 1. So at least 30 handles, 1 to 2, or a 1 to 3 if you can permit it. So 45 handles would be the minimum if you're trying to be more aggressive. Are you trading a funded or an eval?
A funded.
Okay, yeah, funded, you should be a little bit more aggressive with your risk, because if you're going like half the amount of risk, like if you have like a 9 handle stop, you can get away with risking double. But
Yeah.
I just say 15 is probably a safer number, and you have a 45 handle take profit. So trading a silver bullet, how much profit should you be looking for realistically? I just gotta see how much handles will be up, because 45 is the minimum number for a risk to 1 to 3. So I'll just pop up there to pass your eval. You just hold into the trade. There's a take profit getting smacked at. Okay, so I'd say around like 900 for a take profit would be good each trade, and your loss would be how much is 50? How much is the 50? I think it'd be like 250, or yeah, it'd be like a 250, 300 loss.
Okay.
But yeah, targeting 65 for this specific trade on the 1 minute. Take profit on this. I'll just tell you the number real quick when we actually get closer to the take profit actually getting hit, because you can see price have a nice run towards it. I just throw out like, how much would it be? Boom, boom. 1.3k. Okay, 1.3k. That's a decent number. But yeah, that's the silver bullet model.
So you think like a 1.5% risk is too high then? 'Cause I know you said
How much are you trading futures?
shit. I'm doing the 1 of 1 funding.
Oh shoot.
Yeah.
Okay.
That's what I'm on right now.
Is that? I mean, I think 1 of 1 kind of like scams some people. I'm not 100% sure on that.
Okay. Yeah. Okay.
I'm not
Hey,
sure.
Mantis.
What's up?
I've seen more people get paid out from them now.
Okay, good. Hopefully they're resolving their issues, because they were
Yeah.
scamming
There was
a
also
bunch
some
of people
issues,
back
but
then.
Oh, the issue was with payouts and things like that.
Yeah. Should be good.
Okay. Yeah.
1.5% of the account. I mean, how much? I mean, I don't know how much pips is. I don't really know how to translate that. But each trade with like a good amount of risk, you should be risking like maybe 250. Max daily loss should be 500 on a 100k account. So
Yeah, I usually go for like
Um,
50 pips.
okay. Take
Sixty.
profit
how
or
much percent is your drawdown?
holy.
Daily draw on 5%. Max is 10.
Okay.
Drawdown. That's
When I did it,
crazy.
I traded like per trade 1%.
Yeah.
I allowed myself 2% on the day.
Yeah.
for 1-of-1.
Yeah, gotcha.
Okay.
Yo, Mantis.
What's up?
When you're using that tool, like the long, like I guess you like the long graph or whatever the green and gray is right there.
Oh,
Yeah. When it like goes all the way up or exits, does it like immediately sell, or do you have to sell it yourself?
for that, for trading on trading view like this, you actually have to.
Mm.
I'll show you all, and I'll show you like a paper account because the papers work similar to how they actually are. So if you take a trade, you can set right click right here. You can just press plus wherever you want your take profit to be. So imagine your take profit is down here at the red. You would, I'd say, sell to Nasdaq, and this would be if it comes down here, this would be your stop loss. But if it sells, it'd be a take profit. So this is how I like to set my stop loss and take profits right here. You can move it around wherever you want. And this is how it usually is on funded accounts. So boom, sell to, this would be your take profit. Your stop loss would be down here. Sell, stop loss right here. You can move it up or down, and this is when price automatically hits one of these, then you're already out of the trade. So I think this is gonna hit my stop. I'll make sure it hits it right here. Well,
Yeah. So it automatically does it?
yeah, automatically takes you out of the trade.
Bet.
I'll have it like right here in between, so it's gonna do one other way. And then once one gets hit, it has to how do I explain this? It has to. You have to cut out the other one manually by yourself.
What do you mean?
You have to, when this sell limit gets tapped, like when this one takes you out of the trade, this one, you just have to click on the sell. You just have to cancel the other one. So if your take profit got hit, you just have to automatically click on X on the sell stop. Because some people leave it to run, and so, yeah, there you go. You can see that took me out of the trade automatically. Now you can just press X to close out the other one.
Alright.
Okay. I don't really think we have any other questions. We know what the bias for tomorrow is, right? Kind of bullish on the day.
Did you go over it again?
Yeah, I'm just a little bit bullish on the day.
Alright.
That's about it, but that can get changed. I want to see. It's probably going to be a really slow week. If we get some volatility on Monday, then I'd be more than happy to trade it, even though a lot of people don't want to. If we get good volatility, I'm in. I'm fine with trading. I used to not trade Mondays like it was some sort of crime to trade it, but I realize now that it's not that bad. I mean, if it's choppy, of course, I'm not going to force anything. But if I see a really good setup, volatility is good. Because this isn't really the volatility I'd like to see, especially on a Monday. Or I don't want to see Seek and Destroy, but if it's a Monday, and I'll find an example of Mondays. Price has a run like this, up. I know this is still pretty bad, honestly. But PM session is also where we can take trades. PM session, it's usually cleaner. So 1 PM, let's look for it, 1 PM. Low move down, push up higher. Where's that order block? Low to high, low taken out. Yeah, I'd say this is alright. But yeah, PM session is also probably what we're going to end up trading tomorrow if I don't see anything in the AM. Are we good? Do we have any questions? Anything else you want to go over?
Oh, Mantis.
What's up?
Oh.
Oh, was I muted?
Yeah, I was gonna ask some, but you can go ahead.
Oh no, mine is important.
Well, mine isn't. Okay. Mantis. So on FX replay, do you? So I want to like do like the 5-day free trial thing on like another Gmail account, right? So that I don't like. I don't know. Anyway, I want to do that. Does it give you like extended like tick history data, like extended history data for ticks?
You could go back as far as you want on any time frame on FX replay.
Okay. Okay, good. That's what I was wondering. All right, thank you.
Yeah, of course. What about the other guy? What was his question?
What? Wait, so how old are you again? Like 16?
Yeah, 16.
Dang, and you got a stat. Mantis, pick me up.
What?
That one's on me.
What?
Listen,
What? Did I
listen,
just
I'll buy you a 10-piece chicken nuggets. Listen, I'll score you.
You hear this guy?
He's a pedophile.
Chill.
I am still a minor.
Uh-huh.
God damn, bro.
Mantis is only like one age below me.
What age? Is there a ranking system though?
Yes, I'm level 42.
Oh shoot. Okay. We've lost spoken lucidity. They're busy on their grind right now. They're studying. They're deep in the 2022 mentorship.
Who?
Lucidity and spoken. They're regulars right now. I spoke with them. They're
Oh.
doing good.
I kind of
with their study.
misspoken, not gonna
They'll
lie.
be back soon. They'll be back, but they're gonna be pretty profitable when they come back. Studying is really important. Hopefully you guys got all.
Okay.
Hopefully all you guys got the journals, like right here. Hopefully you guys got this and actually made a template of it so you can actually journal properly. This is essential.
I have never journaled before.
I'm gonna give out homework tonight. You know what? We need homework. Okay, let's do some homework.
No.
We're giving out homework.
Oh wait, Mantis, do you
What's
have
up?
school tomorrow?
Yeah, of course I have school. I'm gonna try getting. I'm gonna say I'm sick. I'm gonna try getting out of school. I'll see if I can.
I don't.
Okay.
Please do.
I'm gonna
Yeah.
try.
Me
Hey, I'm
too.
gonna try. I'm gonna try. I'm
Yes,
trying my
please.
best. I'm not 100% sure. It probably won't even work, but I'm gonna try. Okay, he's cutting it. Okay, homework. What should the homework be for tonight? Huh.
Learn how to enter trades off of a
Silver.
retracement.
Okay, retracement. I want to do silver. Actually, no, silver. It has to be generalized towards everyone. I need some time to think. Tonight's homework, you guys gotta journal your trades. I just want to see you guys' trading journal. Trade everything tomorrow, okay? So, here, homework.
I see AMD on the charts right now.
Oh, yeah, you're right.
Second. Oh, dude, that AMD looks so nice. Look how big that pump was. Oh my god.
Hey, yo, chill, bro. What the fuck?
Okay, homework's out. You guys do it. I'll see you later.